Doing this before, usually, during an election cycle, before elections, when there's a major pullout, what happens is that the reserves is usually leaned upon to meet obligations, and this is one of the essence of having such a reserve. The coverage period of that reserve then declines, usually before elections, and after elections we see major inflows come back. So how sustainable it is? Well, I think it's sustainable. We saw this in 2011 when reserves dropped below 30 billion, and we've seen reserves drop even in 2015, also to very drastic levels. So usually before elections, there's usually that sell-off on the market, equities and fixed income, and then we see pressure on the FX side of the market where demands are to be met, obligations are to be met, and the CBN usually does a nice job in managing that without having too much of a spike in the FX rate, which usually brings in cost, push kind of inflation, which could be chaotic. We experienced that in 2014, 2015, and they are doing their best to manage the situation this time around, and we think it's sustainable and actually a stable process they've had so far.
All right then. So, but then next, I'd like to take you up on the stop rates we've seen so far in the Treasury bills and OMO auctions so far.
Yeah, we've seen a growth. We've seen a upward movement on the OMO stop rate from 13.5 for the 1 year to 14, and for the 182 days we saw it get to 12.75 from 12.5 on the average. What is happening? What happened this week is simply a case of system illiquidity. CRR debits continue, and with OMO, incessant OMO every week, we've seen that system liquidity has declined. System liquidity as at Wednesday was as low as 5 billion, and as of today, as we speak, it's about 38 billion, simply because they didn't mop up all the funds that matured from OMO. In some quarters, it's thought that, maybe yields are going up because of inflation. I wouldn't say that has started yet, even though we've seen upticks on inflation from 11.1 to 2 and then 11.28. We still don't consider those as major events, even though they will go a long way in shaping your view of what is to happen next year.
Okay.
The IMF itself has said that inflation rate will get to as high as 13.5. In my opinion, it could exceed those levels simply because of the challenge that we foresee, especially with food and possible removal of fuel subsidy. We're going to be hit with major costs if we have to pay more for petrol, and then with the insecurity and flooding we're seeing in the middle belt and the northeastern part of the country, food prices are bound to go up. And you know that in the computations of inflation in this country, the food basket carries a whole lot of weight. So those are the premises I'm basing my assumptions on. Going into next year, inflation is going to be a key concern. And for investors of fund who are looking at their real rate of return, they will be pricing, bills and bonds lower.
All right.
Expecting better yields.
So very quickly, another very interesting news we saw this week was the approval of the 2.8 billion Eurobond, by the DMO as well, coming from the Senate. What do you make of this as we go into next week?
To a large extent, we've known of this borrowing. The only part of it that had some level of probability to it was whether the legislature was going to approve or not. But it's been priced in largely. The budget deficit is about 1.6 trillion, and if you compute the 2.8 billion as approved, if you compute that borrowing, were it to be done this month or next month, using the 305 CBN rates, we'll be raising about 800 to 900 billion on the estimate. That in itself cannot cover the 1.6 trillion deficit that I just mentioned. It means that at some point, for Nigerian Treasury bills being issued by OMO, the DMO office, and the primary bond issuance, there could be some uptick on volume issued.
All right,
this in itself would affect yields expectation by most investors and the few people still playing in this market right now.
All right. So